It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you to make better financial decisions in your life. And today's show is going to start with a topic that has absolutely been one that has just enraged people and shocked them. Your driving being spied on without you having any idea it's going on. And now, the New York Times reports that several apps that we may have on our phones are being used in a cooperative effort with an insurance industry database to spy on your driving. One of the apps I actually have on my phone. Also, when's the last time you checked to see if there were errors on your credit report? I'll tell you why you should. Because you'll be stunned how many of us do have errors on our reports, including ones that could cost you more for insurance, deny you a loan, or you face a higher interest rate because of those errors. We'll talk about that later. So, there was a story that just exploded back in the spring that General Motors was tracking how people drove and then selling off the data to make money to the insurance industry, and people were having their auto insurance canceled or their premiums go sky high because of the data GM was surreptitiously collecting and selling off to the auto insurers. And this is one of those things, I call it the curse of the MBAs. Some clown at GM thought it was a great idea to generate a new revenue source by Benedict Arnolding their own customers. Of course, there are lawsuits now, and GM customers, drivers that are furious. And GM's then read defense was, well, in the terms of service, you know, those like 80-page things written by lawyers, it says we can do this. And then GM realized, oh, that's not going to work here, and discontinued and has issued a semi-apology. Well, now New York Times with a follow-up says, hey, guess what? One of the most popular apps out there, Life 360, also has the ability to track, and if you give them permission, is selling the information off to an Allstate subsidiary called Arity that I've never heard of, that Allstate founded mid-last decade. And Allstate is paying for access to the data and then making it available to themselves and apparently others in the insurance industry. Gas Buddy, which is a very popular app that I have recommended to people but don't use because I drive an electric car, has this thing where you can see what gas prices are at various stations, and people all help each other by posting prices. So Gas Buddy has a feature. You have to turn this on to then have them sell off your data to this Allstate subsidiary called Arity, or however you say Arity, I guess, A-R-I-T-Y. And if you have Gas Buddy, be aware of this. If you're using the feature that Gas Buddy tracks how you drive for your fuel efficiency, and it tries to do behavior mod on you to get you to drive more efficiently so that you spend less on gasoline, they are now, that information then goes to this Allstate subsidiary that now has that information on you. Now, New York Times reports that in the agreement you sign, it's called the drives function on Gas Buddy, the agreement is in small gray font under a big red button labeled Join Drives. The tiny disclosure says, this is quote New York Times, says simply that by clicking Join Drives, you'll share certain information with Arity and agree to Arity's privacy statement, which is not even there. You have to click on a link to see it. The language does not explain what Arity is or does. So there are tens of millions of people that Allstate promotes that they're selling their personal data off to other insurers and making money from it. So they're selling to their own competitors. And wow. So somebody heard about this, I don't know how, and is reported as having contacted Life 360, and they got a canned response. And so Life 360 said that they are tracking personally identifiable driving data depending on what you opt into with them. And there's site after site that's doing this. And the reality is there's two problems here. One, if companies are going to say, hey, we're going to give you this for free, or in the case of the premium Life 360 services, you're paying for them, and then they're selling your information off. We should have clear disclosure about how our information is used, and we should have clear rights to privacy. And I know a lot of people make fun of Europe. Europe got this right. You ever sign up for something in Europe, you have to go through all these things. I agree to this, and it's clearly stating, and I agree to that, or I don't agree to this. And you get to choose item by item. That's exactly the kind of law, this does require a law, that we should have in the United States.
All right, we'll go to questions. This one's from Todd in Florida. We're going to be purchasing a new vehicle this fall, and it will be new because there aren't any options for a hybrid 8-passenger vehicle. Car loan rates seem to be around 5%, including our community bank, and the best dealer specials are maybe 2.99% that I'm seeing. But we have enough money saved to purchase the vehicle with trade-in, so would it make sense to borrow against ourselves and make car payments back into savings?
Yes. Yes, absolutely, Todd. If you have had the discipline to save money, you've got the money that you can pay cash for this, unless you get incredibly cheap, and 2.99 is right at the edge of what I'd say.
I guess I just posed a similar question to you.
Yeah, and it was the same kind of thing. No, but it's coming up with a lot of people. Yeah. I'd say if you can do the 2.99, then maybe you take out the 2.99 because that should work to your favor. But otherwise, just pay for the thing and own it free and clear, which is a great feeling.
Alex in Alabama says, I live in South Alabama where the cost of living is very low, as are wages. I make around $24,000 a year and still live comfortably while investing and saving. I'm currently without a car, and a lot of the car buying guides from you and others talk about only buying in cash and the 20/3/8 rule. These rules are hard to apply to my income, as monthly I'm bringing in around $2,000, and so the rules say that I should only get a car if it's less than $160 a month. This obviously isn't reasonable, and I was wondering if I should ignore the rule and just get a car I can afford, even if it's outside of the quote-unquote rules. Thank you for everything.
So the 23 and 8, nobody ever talks about that anymore. It's 20% down. I've always said, you always want to take on an auto loan 42 months or less. Mm-hmm. This is actually 3 years, 36 months. And the 8 is it should never be more than 8% of your monthly income. And the idea is that you buy a vehicle you're never going to be upside down in, owing more than what it's worth. It's never going to strain your finances, and you're not going to be paying for it forever. The idea of this worked when there were a lot of used vehicles you could buy very cheaply. It's much harder to do that right now. But if you are going to have to go outside those rules at your income, which obviously you are, please take the time to do two things. Consumer Reports recently put out a list of very inexpensive used cars you could buy that were reliable under $10,000. And that's a great place to start. and try to limit the length of the loan as short as you can. And, there's an interesting thing about, there was a new chart of the United States showing cost of living in different states. And what you said is completely true. In Alabama is one of the cheapest states to live in the country. But at the same time, the paychecks tend to be quite a bit smaller, and it's harder to do things like buy a vehicle as a result of that dual combination.
But great for you that you're saving and investing, living
Fantastic.
comfortably. Chris in California says, thank you for saving me tons of money with your past advice. Hopefully I can repay it with what I discovered. I don't think I've heard you mention this. I purchased a summer airfare for my family of 4 on Southwest. I saw that they were running its birthday sale and thought I'd try to reshop the fare. Unfortunately, the sale didn't apply during the dates of my trip. But I did find that my return flight was $137 less per ticket, but my departing flight was $50 more. On their app, Southwest lets you change or cancel. Rather than cancel my whole itinerary, I changed my return flight to the exact same flight, and now we will all have $137 in non-expirable credits.
Chris, you're a genius. And because of the softness in domestic air travel right now, even though airlines are booking booming numbers of passengers, they're not able to fill planes as easily, and fares are dropping. If you bought tickets quite a while back, like in Chris's case, reshop your fares, whether it's Southwest or someone else. Almost all domestic fares are one-way fares. So you can change one of the flights, not change the other, and earn credits back just by reshopping. You can even, what I like to do is I buy my domestic tickets as one-way tickets. Completely separate reservations. And if one of the fares is much cheaper later on some other airline, I hold the credit on the original ticket, canceling that, buy the ticket on the other airline, and then I've got that credit like a gift certificate to use for future travel. But I've always talked about reshopping your hotels and cars. It's absolutely clear that now we're in a pattern of downward-facing airfares domestically. And the more you reshop your fares, whether you stay on the same airline or not, the greater likelihood you're going to get that credit, just like Chris did, for future travel. And good for you, Chris, doing that and mentioning it. And Southwest, which flies more passengers domestically than anybody else, Southwest is going through a tough financial time right now. And so they keep offering these pop-up sales, typically midweek, often on Wednesdays. They'll offer deals, and that's when you should reshop your fares. Coming up ahead, something you should pay attention to, a really Dullsville thing, probably duller than watching paint dry. Keep up to date on what's going on with your credit. I'm going to tell you why. What you don't know can hurt you. A lot of things in life we just leave on automatic pilot. And we don't really think they really matter that much, except at certain episodes in our lives. But one thing that is used so much as a report card on us today is what's going on with our credit. And we don't have a credit score. We've got different credit scoring models. Different companies provide credit scores. You're just looking at a direction, not a precise number. But credit reports are so often inaccurate, it's stunning. There was a thing that Work Money did along with Consumer Reports where they had 4,300 people check their credit reports for accuracy. Okay, so this is really funny because most people never pay any attention to their credit reports. And first, roughly 25% of people who tried to check their credit reports couldn't gain access. They couldn't get through the validation system at Equifax, TransUnion, or Experian, which often means there may be a problem there. There may already be an identity theft thing going on. Somebody may be pretending to be you. And when you tried legitimately to access your own report, you couldn't, and you didn't know because you haven't been tracking what's going on with your credit report or score. Second, the other 3/4 of people who check their credit, just under half found errors on their report. And you had about a 1 in 4 chance, a little higher than that the errors on that report are damaging your ability to qualify for credit, or the rates you're getting for credit, or being denied insurance, or paying higher rates for insurance because of those errors on the report. The credit bureaus are really not into precision. They're into production, volume. And we're not their customer. We're just a data point. The credit bureaus don't care about you and me at all, other than that we exist. And they're able more or less to have information about us that may or may not be accurate. And then they sell that information off over and over again to who their real customer is, which is the banks and the insurance companies and the credit unions and apartments and you name it. So the problem is, when you don't check your file, you could really be hurt in many ways, even potentially with employment, what's on that report. So this is why I really go on and on and on about checking your report. You know, now your score is available to you simply by looking for most credit card companies. They're checking your credit score every month, and they'll publish it right on either their website when you sign in, their app when you use it, or in some cases, if you get paper statements, on your paper statement. Usually you have to sign in or use the app. You can see it. That still is not your report. You can see your report for free routinely now at what used to be once a year at annualcreditreport.com. Now be warned and be wary and be aware. The credit bureaus now provide more than the law requires by making your report available to you routinely instead of once a year for free, because once you're there, they try to sell you all these memberships you don't need. Don't be lured in by any of those. If you want a membership, use one where you trade some of your information for free access to your reports and scores from 2 of the 3 major bureaus at creditkarma.com. Credit Karma is great to use to get a checkup. You see how you're doing generally with your credit, and you get to see your reports and see the accuracy or inaccuracy of them. And know that so much information has been hacked about you and me that you are really putting yourself at risk. If once you've established like a relationship with Credit Karma or whatever, if you don't freeze your credit, you are laying yourself wide open for an identity thief to apply for credit as if they're you, and cleaning that up later, woo, what a mess. So this is actually 3 things I want you to know. I want you to know dynamically over time, routinely, what your score generally is. And remember, it's general, it's not going to be specific because there are so many different scoring formulas. But you want general direction. 2, I want you to see what's going on with your credit. And 3, I want you to put in place a credit freeze, a free process with the 3 bureaus that even if somebody does have access to your information through one of these zillion different data breaches, they can't use it to apply for new credit as if they're you, leaving you in a world of hurt. Christa?
Okay, this came in.
That's a lot of assignments to give people all at once.
I hope I'm saying this right. Falah in Georgia says, I pay my mortgage every 14 days, but recently noticed that the bank holds the money and processes it every 28 days. This means they keep my money, which is about $1,000, then process everything together on the 28th. The reason I decided to make payments every 14 days rather than monthly is because I was of the opinion it would shorten the term of the mortgage. Is this the standard practiced by the banks? I attempted to ask about the practice with the bank, but I was informed that this is what they do. I would like to know whether Processing my payment every 14 days will shorten the term of my loan. And if that's the case, how can I approach the bank to make this modification?
So I hate to be the bearer of bad news. Almost all mortgages in the United States do something traditional that goes back before computers were omnipresent or ubiquitous or everywhere, however you'd say that. And so mortgages, by tradition, the interest is calculated monthly, not daily. You look at any credit card statement, interest is calculated daily. And paying your credit cards quickly, like you're trying to pay your mortgage, if you're running balances, huge benefit to you with reduced total amount of payments over time and total interest you will have paid. With a mortgage, it has no impact. In fact, a lot of lenders won't even accept a partial payment like you're doing every 2 weeks. And what they're doing is not applying it every 28 days. They're applying it on the 28th day of the month for the next month's payment, essentially. So you are paying 12 mortgage payments a year, but splitting them in half. You're having zero impact on your balance. If you want to prepay on your mortgage, which I only recommend if your interest rate at this point is above 5%, what you do is you calculate what you've been trying to pay every 2 weeks. Figure out what that is over the course of a year and pay that much extra once a month on your payment. If you have a coupon, you're paying additional principal payment. Otherwise, online, you're letting them know that additional money you're paying. Let's say your payment, you said $1,000. So let's say your payment a month is $2,000. And instead you decide, I'm going to send them $2,200. $200 of that would apply to principal prepayment, which would accomplish what you're trying to accomplish. And the rest would be your normal payment as agreed. That's how you handle this with your mortgage. Again, there are a small number of loans in the United States that now do calculate on a daily basis, but it's very rare.
Douglas in Texas says HP is sending me a new HP Envy 6020E printer for free for signing up for instant ink cartridges at $6.99 per month. There's a 30-day trial period. Is this a scam? It costs money to make a printer and to ship it. How can they do this and still make a profit?
Okay, this is a business model that we've seen from time to time all through the years in a variety of businesses, and now HP is doing it. All the money for HP is made from the ink. $6.99 per month allows you so many copies per month, and right here on HP's website, those of you who see the YouTube show, here it is right here, showing the printer you get plus the ink. Enjoy hassle-free printing with the HP all-in-one plan, one monthly payment, all your printing in a single plan. So the idea, and it starts at $6.99 a month. Depends on the printer you have them send you for free and how much printing you do. This is not being your friend. HP's business model has always been to sell printers at a loss. This is a step beyond, because now they're not having to involve retailers and pay a retailer essentially a markup to sell the printers. They are controlling the distribution of the printers and then charging you for the use of them. I go the other direction. I like to buy one of the printers that I pay more for the printer, but the ink is nearly free. There are a lot of laser printers that are just black ink on white paper that the cost to print per page is so low, it's crazy. I use a Brother printer right now. That's one that I read about, I think in Consumer Reports may have been where I read it. That had an extremely low cost of printing per page, and it's been a great printer, very good printing. I'd rather own it and I've never had to buy an ink cartridge for that printer. And that's my thing. And there's the Epson printers that you pay more for the printer.
Eco tanks.
Yeah, and you never have to buy ink, basically, ever. That's my thing versus the Hewlett-Packard thing of, get this for free. What could the catch be? It's not a con. It's not a ripoff. It's just not going to typically be cost effective.
Michael in Indiana says, I received an email from a giant monster mega bank that I have a Visa credit card with. They will increase my credit card limit another $7,000 if I log on and update my income. I don't need a higher limit as I rarely even use 20% of my available limit. Is this something I should do?
Yes. Yes, Michael. Give the bank, don't lie about your income. Give them your income and get the higher credit limit, because 30% of your credit score, going back to us telling about credit reports and scores, roughly a third of your score is based on what percent of your available credit you're using. So you get that higher limit. That doesn't mean I want you to go charge more on it, but having that higher limit will improve your score, as you'll be using an even lower percentage of your available credit. The people who have supercharged credit scores are using 3 to 7% of their available credit on a card. 3 to 7. So even 20 is not putting you in danger. It's just not getting you the highest possible score. I'm also concerned about something, Michael. I'm hoping that you have more than just one card. I don't want you to have one card from one bank. And there are people who have, let's say, 3 to 5 cards with Chase, or they may have 4 cards with Citibank or something like that. And that's all the credit they have, is all with one financial institution. That is like, that's like walking a high wire with no net underneath you. Because if that bank decides they don't want you anymore, you go from having multiple lines of credit to none, and then you have to reestablish a decent credit rating. So you always want at least 2 cards from at least 2 different issuers. And yes, take that credit limit increase. The one time you don't agree to report your income to a credit card company is if your income has gone way down, or you're now unemployed, whatever. You report that, and they're going to kill your credit. They're going to kill your card, and that's going to put you in an even worse world of hurt than now being unemployed. And I want to thank you so much for joining us today. Sorry I ended on that Debbie Downer kind of note there. The good news is people who do lose their jobs, the ability to find a new job has been much better in this era than it's been in many prior economic eras, because the economy is perhaps the world's strongest economy right now, and we've been a job engine in the United States. Even as some employers are laying people off, others are still looking for workers. So thanks again for being with us. Know what we're devoted to, and that's you. And if there's something troubling you, you've got a question, a problem, you don't know how to resolve it, know that we offer free one-on-one advice to you, 30 hours each week. You can see how to get that free advice if you go to clark.com/CAC. What we're about is you, learning ways to save more, spend less, and avoid getting ripped off. See you tomorrow.